Hello guys, welcome back to SND Precision Mentorship. Today I just want to talk about this type of entry, our pattern for us to be able to take the entry. And all these things you see, they play inside the range. So without you understanding your range, it's going to be very difficult for you to be able to take the entry. So this one, they're the one going to help you. Let's say if you remember about the range, the way we talk about the range and this other stuff. So this one, they're the things that are going to help you. You can see you have your point of interest. Let's say you have your higher time frame point of interest. It's somewhere sitting somewhere here. The next minute when market gets here, before market gets here, market always prints a I, the one that we call a change of character. You're gonna see the way market stop here, market pull inside the range, then market retrace again. After you see market take out this area, there is a way that you can take an entry straight from here, or what you need to do is to wait for market to break the major structure, market create a liquidity, then market retrace. So when you see something like that, this is when you know market is gonna do what? Market is gonna come back to your point of interest after there is this liquidity. After they run this liquidity, it either market is just gonna run it with maybe like a 5 pips, 2 pips, then market starts buying. So you need to pay attention. This is applied the same even to the bearish. When you market want to sell, it's gonna be the same pattern. One of these always happen. So this first pattern, the one that you want to look, is when market is going to the upside, market is going to create what we call an internal liquidity. If you can check, this is the internal liquidity. So market is gonna make sure after they break structure, market is gonna make sure to come and seek for this liquidity. It's either it's gonna be a block, it's either it's gonna be any strong I that let's say a I that was been printed inside this range. So after market break this one, the only thing that we're gonna do, we're gonna put our Fibonacci from the low to the high. Then we're gonna see below the 50%. This is why we're gonna focus for our entry. There is also another type where you can see, let's say market create something like this. Then you focus more on what we call the higher time frame point of interest that you are going to find there, so that we can be able to take the trade. This is our first topic. The second one is gonna be this one. You have your stop out or manipulation, then market mitigate your point of interest. If you know how you can risk, you can take a trade here and your stop loss below the zone. Then the target is gonna be this one. Let's say if market break this one, you remember, because we don't know if market is going to break this. Until market break, this is when we understand that market is gonna do what? Market is gonna come to the downside to come and mitigate a certain area so that they can do it. They can continue buying again. So on this case, you're gonna see market is gonna give what we call a low resistance liquidity run. These things, low resistance liquidity run. When market does something like this, you know already after market mitigate this area, this zone, this liquidity, the one that was resting here, that is the one is going to be your target. You're gonna target all this liquidity until this high. Then after market break this level, then you're gonna target another high. Same scenario again happening here. The most important things that you need to understand is about this inducement, because there is people that if they see market break this high, they're gonna think market is gonna come back and start doing what? And start buying from here again to go to the upside. So as long as you understand all the stuff the way they are happening, you understand everything the way it's going, you know already, okay, this is what is going to happen next, and this is why it's not going to happen next. So look at these things properly. Then I'm going to show you in the chart. You're gonna see how I'm taking my trade like every single day, what I'm looking and what I see. I'm gonna show you in the chart just right now. I hope you understand the way they are. The only thing that you need to put in your mind every time you open your chart is this 4 process of the daily trading range. Look for the major break of structure. You see, major break of structure. Look for the next liquidity. You see the next liquidity is there. Look for the IFC. What is the IFC? IFC is this candlestick, the one that we have, let's say, somewhere there. You see, we have somewhere there. what we call the IFC. An IFC is the candlestick, let's say, the change of state of what is happening, let's say, on this movement going to the downside. You see where a market left orders. This is where you're gonna have your IFC. But what is the FU? An FU candlestick is the one that run liquidity. You see the candlestick that they're going to print here is the one we call the FU candlestick. Why an FU candlestick? Because it's the candlestick that run liquidity here and it breaks structure. So it make that one become a strong candlestick that is going to hold the market. Then this is what I'm saying. Then trade the reaction, FU, tap into an FC. IFC is the one that we have here. The decision point that we left there. Then why market come here? Market just come to tap on the FU. FU is the candlestick that run this liquidity. In short, we can say a candlestick that run liquidity. Then we leave all these fancy names. So let me go back to the chart so that I can show you part of the entries that have been I took like this week. If you can check here, let's say example here. Let me cut the chart. Let's say example here. So if you can check here, the only thing that I did for this day, when I wake up, I look to identify where is all the levels where I'm gonna take the entry. Sometimes you're gonna wait for market to do what? To give you what you want, but market doesn't give you. For this day, what I did was I waited for market to do what? To come and fill this SR flip, the one that is on top. But when market break this liquidity, then market give me something like this. Let me show you. Let me go to low time frame so that you can see what happened there. So after markets get to that point, we break this line. You can see we break this line. Then markets push to the upside. So after market push to the upside, the only thing that I was waiting, I saw market went to the upside, then market come and break the last point. So after market break the last point, the only thing that I end up understanding, what is these things I cut again? The only thing that I end up understanding was, okay, if market can do something like this, where is the level that market is going to do at? Market is going to hold. That is what I understand, because I know market is already done something like this. What is the second picture? Because the same thing. I have a stop ant. Market create a strong eye. How for this one to make it a strong eye? I'm gonna wait until market run the low. I see markets come and run the low. Then market push to the upside. So when I see something like this, already in my mindset, I understand that, okay, if market is coming to the upside, then I need to refine my entry. I'm gonna show you guys so many examples so that you can get these things properly. Then I think I was on M1. This is what I was looking at, because I end up refining. I don't remember what I refined there, but I believe it was M1. So after I get to this area, you see what is happening. I have a stop ant. I had a break of structure. I have this inducement. I believe it was M1. Yes. I have this inducement. So all this was my zone where I was looking for market to do what? To come and start selling. Market get there, then market sold. Where is the level that I'm going to take my TP? My TP is just this below. Remember, guys, I told you, at least the only thing that we need right now is for us to make maybe 5 pips. Sorry, not 5 pips, 1 to 5, like every single day, or 50 pips. So this is what I saw after what market did. Market returned back to my zone. Then I took myself from there. Now, check again what happened on this zone. So let's say someone, if you don't understand how you could be able to catch the movement here, market always come and give you another opportunity. You see here, we have again, the run stop. You see, the run stop. Like this is the big picture now, because the one that I was looking was on the small time frame, let's say to catch the best trade. Remember, this zone here, still a valid zone. Market can either come here, mitigate this area, and push to the upside more. But if you check what happened now on the higher time frame, after market touch this zone, then market start pulling. This is what end up happening. You see, after they touch this zone, you see market pull to the top. This is one of the entry also about the SR flip. You know, after you have this entry, market is going to give you another SR flip entry. What is the reaction? We react on the level where we have another pattern, like our pattern, the one that we look. This is why market reacts here. So if you don't see it, let me just mark it for you so that we can see, like, this is our pattern that we have to look in the market like every single day for us to be able to do what? To take the trade. If you can check here, we have a stop hunt. Let me go to M2. M1. This one at least is okay. You have a stop hunt. As you can check, we have a stop hunt, the one that is there. Then here, we have what we call a break, market break, that's I. Why that I? Because this I was the one that produced this lower low. Then market fly to where? To the upside. So when market is flying to the upside, the only thing remain is for us to understand now where is the zone that market is going to hold. Then markets come here. If you want, like the way I did, you see this low. You can see that low. It's a sort of QML also that happened there. Then you're going to talk about this on the topic of QML. Now, you see what I was saying, market, the way it reacts. So if market can react from there and start buying, the only thing that you need to pay attention is where is your liquidity? This is your liquidity area. You see that low there. That low is your liquidity. Because there is so many people that they expect this block is going to continue holding and market has to come and hold from there. Now, check what happened after market did whatever it did there. Let's see if market is going to give us the break that we want. Because we want to see how market is going to break. And then market break. You see, market break. The only thing that we are waiting for now is to see where is the most liquidity area that maybe market is going to come. We just look for the same pattern again. As you can check, we had liquidity taken, and market come and break. You see this low? Market sold from here, it sold, then pulled to the upside. So this is the area there we're gonna look like market break. Where is the liquidity? Then we have a liquidity somewhere here. This is where we have all this area. Because you need to understand where market is gonna create all those traps for them to do it, to sell or buy. So now, this is all our zone. Where market, we are thinking market is gonna come and sell. But here I use what I call, if I'm not mistaken, I use the mirror stuff where the week engulfs the other previous weekly, because this is what I was looking at. Market touch the zone. You could solve from here. But me, I was still waiting for something to happen. It sold again because I was not able to see all this stuff. But I was just showing you what I see there and what I understand. Then market is still going back and give me something that I always look. Okay, you can see how market get again at the same area and start doing what? Start selling again. This is why you see my zone was somewhere here. My zone was somewhere there. And market drop. Market went to the downside. You can see these things that are just so simple. It just requires you to do what? To understand what is happening and how market is doing what market is playing. You're going to ask yourself, okay, why is this zone become again valid? The only thing that you need to pay attention is going to be this week. If you can check, you see that week there. Market manipulate that week. But the original movement before market create this high started where? It started from this low. This is where it started. If market started there, then market could not make it until maybe, let's say, to that drop. Where is the area there you expect maybe market to come and play again? You're going to see that, okay, this eye, the one that they print here on the New York, that eye there was just liquidity. Then they come at 9:30, market sold. Already, if you are targeting, let's say, 1 to 5, this is the proper 1 to 6, 1 to 5, it's somewhere here, around this low, because that is the low that creates all those manipulation. I'm going to show you again, let's say today, what happened today and what happened yesterday again. The same scenario. Sometimes when you see I'm taking the trade, you don't understand how is this guy taking all this trade. No, the only thing that I follow is the logic. Let's say the way market was coming to the downside. Markets, let me show you face, guys, here. Here, I remember I hit a stop loss. I just follow same thing. It's not like because I hit a stop loss. And I promise you guys, it's not like because you have this pattern, market is just going to do what? market is going to continue respecting them everywhere. But sometimes you're going to take them in the wrong side. Let's say example here, market react to the SR flip. You see what happened? Market react to the SR flip. But what I was looking on the low time frame was this one. This was I was looking on the low time frame. I said, okay, if market can do something like this, market break this. You see, the only thing that maybe I miss here was the way of following structure. So that was the only thing that I end up missing, like say following the structure on the higher time frame. I know market is already give a reaction on the SR flip, but what I understand is that one thing, there was not a proper liquidity. There was not a proper liquidity shift from that area. So if there is no a proper liquidity shift from that area, what am I gonna do? Because I need something like this. When market gets here, market has to create an eye, come, take out that eye, we break the low, we create an inducement, then we run to the downside like this. This is what I need. But I did not get that one. And what I end up doing was, okay, since market is already done that, let me wait for it. Because I was just waiting for it this side. This was I was waiting for it. I said, okay, I'm going to sell from here when market get here. And this is what I end up happening. Then market try to compress, calling people more. And you see, market just fly. So if you are trading with hope, let's say example here, I risk, what do you call? It's a small amount, not that huge. I risk a small amount somewhere there. You can see here was 7 pips. I hit 7 pips SL. That is not the problem. The only thing I can do now is to wait. What is happening? How is the market going to do? That is what I was waiting. Then this also end up happening. When I got there, you see what happened? How market crashed so crazy. After hitting my stop loss, market gets us, I don't know, in a certain area, then start dropping. I was not even looking at it again. So when I have something like this, the only thing that I need to look at, okay, what is the market market showing me so that I can be able to do what? To catch my trades again. That is the most important things that I have to do what? I have to look. And when I saw something like this, the only thing that I end up understanding is that there was another area, I think somewhere here, this candlestick here. I was also looking at this candlestick somewhere here. I said, okay, let me see how market is going to play here. The only thing I did here was I waited for market to get here and give me something like this. Sometimes you want to try to risk and take a snipe entry, but market show you flames because there is nothing that is showing me that this eye is going to hold. Until I see maybe market get here, change of character again, proper liquidity, then I'm going to sell it from here. This is what I was waiting for. Then at the end of the day, this is what ended up happening. Let me show you guys what happened. And then market did something like this. Market take time here. And when the New York things open, market did something like this. Do you see, guys? So imagine I hit a stop loss here. I could even again hit another stop loss here. If my psychology didn't tell me that this area, just wait a bit, because there was nothing proper for me to do to react. I waited, and this is end up happening. I sold exactly here. This is why I sold. When I sold, market took time at this area here. Market took time at this area. The only thing that we need to understand right now is this. If market sold and get here, start selling, where is the area that maybe we're going to look to say market run liquidity, market run a measure high? Can you see? Market run a measure high and market break this low. If market can come and break this low, this is when we're going to know we are going to do what? We are going to look for our sell position. So let's see what happened. This is what happened. Do you see, guys? After I exit, because market took time on this area, I had like 3 positions, and my mistake was I did not even, let's say, hold 1 position. Then when market was coming this side, after we break this low, Market did what? Market, I think it's pull until somewhere here, if I'm not mistaken. Because of this manipulation, I think. Because of this manipulation, I remember correctly, market pull again from close to that. Okay. So market pull again there. Remember, this is the area I wanted to sell because of this base ignore stuff. So because there was a base here and there was another base here, market get there and market sold again. So after market sold, I say something to myself. Okay, if market sold there, this one is become liquidity, then I'm going to sell from here. This was my phase on. I'm saying I'm going to sell from here. If you guys remember, I even put a picture in the group. If you go to the group, you're gonna see there is a picture that I said market is going to do what? Market is going to sell from here. And at the same time, the only thing that I understand is that if markets play inside this zone, so meaning this area, it will become our zone where we have to monitor also, where we have to wait for market to come and react to it. We can even refine that area to try and get what is the proper. Sometimes we can use this this area. Let me show you guys how you can do. Go to M3. Okay, on M3, if you can check, there was a small break. If you doubt all those stuff, like is there a break or what? If we can check properly, the break is there. You see, we have a break there. I can even refine all my level. Let's say I put it here, and this I here is gonna be a liquidity. This I is gonna be a liquidity. And that day also, the only thing I made a mistake was this. If markets run this liquidity and market break structure, let's say market break here, this area was a perfect zone for me to come and sell again. I was angry because of what happened. Then market went without me. So this is the way I refine my area. Maybe let's say if we go to M2, yeah, this zone still for me proper. You see, still for me proper. If you want, we can use that one also to be able to catch. Or what we can do, let me check M1. We can say maybe this imbalance. But so far, I'll be happy to use this one and put my stop loss above. Or if I want to get more, I'm going to do two entries. One is going to be at this red line, and the other one is going to be somewhere here. That is what I'm going to do. Then this is what end up happening. Guys, this is how I take all my entry. There is no magic to what you see me posting. I understand market is already break structure, market is already run liquidity, and we break the measure one. So what is the level? If I take the entry, I'm going to target the low. What is the low? I'm going to target this low. This is going to be my area where I'm going to target this one. Why? Because there is this shifts in a market structure. It's a liquidity that they have to target. Then if I take again these entries, this entry, let's say the first one is going to be here. And I remember I told you guys, all my stop loss is going to be above. And I'll target again the same thing. If I take again this entry, let's say from here, my stop loss again is going to be above. I'll target what? I'll target again the low. This is what I did. Nothing complicated, just simple. I know I'm gonna risk here, I'm gonna risk here. The only thing that you need to do is taking a chance when you see market is playing, but align with what you understand properly. Remember, I told you guys about this one, I hit a stop loss. Then this one here, market manipulate, then they come, they react to it. So we have to wait. This is the game of waiting. We have to wait. Like if you want here, you can see break. This is a strong eye. Then market create liquidity. You could take again another sell if you want to scalp. But depend on what you understand. If you don't know this, just stay away from it and leave the market do whatever it is doing. So if I'm selling here, what is it going to be my target? I'm going to say, okay, let me target this level. Maybe example, I'm going to target this area. For me, this one going to play. Let me see. Let me put a line again from there, because this also is very important. So I'm going to say, okay, since I have this zone, you see, market manipulated, then markets come, but I'll prefer to use the one that is below. Let's say, and if I take an entry, example, if my entry is gonna be here, let's say I take the first entry, if in case markets come here, then I'm going to target this one. And if I take another entry here also, I'm going to target again the same thing. I'm gonna target again the top. Do something like this. I'm gonna target again the same thing, or I'm gonna say I'm gonna make it to there. And let's see what happened. Okay, so the first one, play this line, it's play, it's happened. And let's see what happened again from there. Okay, so since here we have this break. Can you see that? We have the break, this is our break, and you can see this break took liquidity here. This area can be the most important zone where we're gonna say, okay, market is gonna come. What is the most important things where we're gonna say is gonna be here? And at the same time, we have to look for our Asian range, like how do you take a trade, because this consolidation can be, let me delete first these things. We can say, let's take with, we look at our Asian range. Yes, this area is below. Okay, since this one is below Asian range, I'll prefer to use this one. I prefer to use this one because that is the decision point is below the Asian range. So the next zone, then I'll put my stop loss here and I'll target the eye. Yeah, let's see what is happening, guys. I'm giving you the full process and the way I make my decision based on everything. And let's see what happened. Okay, they touch us in, and can you see what happened? Markets manipulate already this zone. The only area that we're expecting again market to react is gonna be this zone. Not because I have this zone, I have my buy from here and I have this zone, I'm going to close my buy straight when market get here. No, I'm just gonna see what is going to be the reaction when market get there. If market can give me the same pattern, the one I look, if market can do something like this, then I'll come here and take it. If market doesn't give me that, then I'm sorry. I'm just gonna hold my trade. But so far, I'm gonna try to take again my chance here and see what is going to happen. In case market is gonna try to come again to the downside, this is gonna be again another level that I'm going to monitor all this area. Or maybe I'm gonna see, okay, we have the inefficiency. I would like to see if market is gonna get and feel this inefficiency price, the one that is resting there. That is what I'm going to do. It I'm going to see. Now let's see what is going to happen. You see, guys, they touch my zone without touching this area. Then if they create this liquidity and we come and break this one, this is when I'm gonna say, let me do it. Let me focus, because what I'm gonna look now, I'm gonna look to see if market is gonna break this one, take this liquidity, mitigate my area, and come break this low. Then I'm going to look for another sell position. If market is not breaking this low, because this low is the most important one that I'm going to do it, I'm going to monitor. If market is gonna come and break it, then this is what end up happening. Market get there, it touch my zone. We can say, if you are the type of guy who rush your market to break even, you can do that, but this is what end up happening on this zone. You see, market did not break anything, but it keep on playing on this zone. Let's say so far already from here, if you take this entry and you could make, let's say 50 pips, 45 pips, at least is something. And this is what end up happening. Oh, sorry. Can you see? It went straight on this zone, targets the price that we refine. If you remember, guys, this was the imbalance price on M1, the one we got there on M1. I hope you can see that. Let me show you guys. I hope you can see that. This is the M1. You see? Market touch there, and market touch and drop. Touch and drop. Same thing, like over and over. Now market get here, market break, this zone. You see the zone where we wanted to do what? We wanted to sell. If in case market break this zone, this is where we are going to sell. So if market does something like this, what do you do as a trader? Remember, guys, I told you about the base ignore things. So this is going to be the zone. Maybe I'm going to say, let me monitor the level here if this area is going to hold and push the market again to the upside. Why? Because market is already break this is significant low and market return to the certain area where I was also monitoring to see if market is going to hold from there. And this is what end up happening, you see. But if I take this trade example, I take this trade somewhere, let's say somewhere here, maybe just from the open, and my stop loss always be almost close to 30 when I trade indices, because I don't like small stop loss on indices. So I'll still be in this trade. But if you wanted to take the most significant entry, you understand that you see the manipulation of what they did here, that this week was being engulfed by the previous one. This could be a perfect entry for you to be able to do it, to come and catch the trade and to target the low. This one was a perfect entry for someone who want to take. Let me delete all this stuff so that we can see what I mean by that one was a perfect entry. Because the only thing that you could see from there, is this one. Market break this area. Market break this area. And market took liquidity. You see this one or this one, you can use any, but as long as you've got this 3 candlestick formation here, this one is more important. And what did the market did here? That is one thing that you need to pay attention. Again, you see this one, it's become a liquidity because they created that liquidity for them to do it, for them to come and run that liquidity. Can you see this eye? You see? They create that one and they come on this zone to come and fill another basic no. You see this one here. Market get there. If you want, you can use this inefficiency or you can use this hidden base because it's aligned with these things that we can call even, let's say we call it a QML and whatever. This is where someone get a confirmation entry, like with all our pattern play. But there is also another way of you taking the trade on top. It's not like because market get here, market just run straight from there. But this one, it will always be a risk trade that me, I don't take. I always wait to see if market is going to create liquidity and run. But if you check this one, you see the way they come. But what happened? How do you take your trade? You know already, market, there is a displacement there. You see? We run the eye. We break the low. Then they create this one. If you go to 30 seconds, sometimes I don't even go there. This one could be a perfect entry for you to come to the downside. So simple. And check what happened again. The same thing. Here you get a confirmation. Where do you target? You target the low. You look. You remember where we said we're going to target. We want to see if market is going to come and run all this stuff. That is what we want to see. And in case we have this one and we have the first Asian range that market never ran. You see, market never ran this Asian range. This also could be a perfect target, like the previous weekly low, whatever. Could be a perfect target that you can do. And this is what end up happening. You see? Boom. And when the next day start, let's say today, this is this is today, 22, this is the today. Then we want to see how is the Asian range going to form. So when we have the Asian range like this, so what do you do when you have your Asian range like that? Do you take a trade straight or what do you do? Like me, when I wake up, sometimes I don't even know where the Asian range was forming. The only thing that I'm going to wait is to see how is the Asian range forming. Let's see when the Asian range is going to finish for us to know. Okay, if the Asian range finish like this, Asian range finish like that. So what am I going to do right now? I'm going to say example, okay, I have this imbalance price, the one that is there. I'll wait to see if market is going to come here and try to mitigate. That is one thing I'm going to do. This is what I did this morning. And I want to show you guys what I did. So I saw this one in the morning. Then I see the Asian range. I also refined somewhere here to say this one is gonna be my zone. In case market decide to drop, this is where I'm going to take my my trade. But how do I take the trade? Do I take the trade exactly when market gets at my zone, or must I wait for my pattern to play? That is the question you need to ask yourself. You are not just going to come and start trading blindly and try to say, no, I'm going to take the trade. No, I need to wait and see what is happening. So I was in M5, then waiting for market to play and try to see what is going to happen. This is what I saw. Market get there. Then market continue, let's say it go up, you see like the way market did. So then what I see was, okay, since market, you can see this one did not break this area. This is why I cannot refine to see like I'm gonna sell from, I need to see a clean break. I repeat again, I need to see something like this. Break, market run liquidity, break the low, create a liquidity, then we take it. That is what I wanna see. If I don't see something like that, no one is gonna kill me to come and do something. I'm just gonna relax and wait for something to happen. And this is what end up happening. Reaction, then boom. Do you see what happened? So what am I gonna do? I keep on waiting. Remember, I wanted to sell from here, but check where market went. So what I decided to do was, okay, if market can do that, then this one, it become a level that I'm going to monitor, and all this I take. Market run that. Where is the next area that I'm gonna see if market is gonna come back for me to be able to do what? To take my trade. It's gonna be this swing low. If market can break this swing low, then I have to refine to go to where? To the upside and try to understand what is happening, where am I gonna take my trade, something like that. And this is what end up happening. Boom, market break. So now when the market break, the only thing that I'm waiting right now is that there was this area, the first trade of the day was this area, because I end up refining the area until this zone. I end up refining until this area because of this imbalance. And this one was what we call a liquidity. This one was a liquidity. I call it liquidity. Then I say, okay, since market is already created liquidity here, what am I gonna do? So I have to do what? To take the trade here. This is what I did. So my zone was up until this area. Then my entry was here. This one was a risk entry, but if I show you how it is, you're gonna be amazed. Why this zone? That is the only question you need to ask yourself. Displacement, liquidity, taken. Did the market break structure as our SOP? Yes. What is the three candlestick formation? 1, 2, 3. Market break that area. It makes all this become liquidity. Check the way they trap people. Most of people, they'll think this is an inducement and this is the area where market has to come and hold. Then check what happened. And after that, I end up again refining here. That is going to be my zone where I'm going to take. I think I was on M2. Then I saw again, there is again inefficient price here. I see again that inefficient price. So since I have this inefficient price, I went to M3 to try and see if I can find something. This is what I found, like this Eden base. Then on M5, I found this rejection block. That is what I did. So when I found the rejection block, I understand I have 3 orders at one place. And this one became my point of interest. And my stop loss was just above. I want to put it a bit high. I just put my stop loss above. Then I target this low. That's what I did. And check what happened. I have everything that it takes like this for me to take a trade. Stop out, break of structure. The only thing I'm waiting is inducement for me to be able to do it, to catch my trade. And this is what ended up happening. This one play out, market create, boom. You see, market get there, straight where I wanted. Market get there straight where I wanted. Why? One of the reasons market get there and did not create any eye in between, let's say if we look on M5, is because we have this liquidity void. They have to come and fill all this sell position from where it started. So if you go to low time frame, you're gonna see all these things they've been creating along the way. You see all this area, the one they've been creating along the way to be as their liquidity before they come and do what and sell from here. If you check, we have this I here, this FTR. Can you see this FTR? So this is when you go to M1, this is where you're gonna find. And this is what ended up happening. Because after that, I was on M1. Something happened again on M1. So after I saw market break again this low here, when market break this low, so I decide to refine again. That is what we do, guys. This is what we do. We do these things for living. So I have to know how my pattern is playing. Then I saw something like this. I saw market run this eye. When market run that eye and market break this low. Oh, guys, already 40 minutes. And market break this low. So where is the area that market is going to sell? I saw all this candlestick. Plus, I saw this base ignore. I tell myself, this week is already mitigated this area. So where is the area that market is going to come to? And I snipe these things like nobody business. I took this area as my zone where I'm going to do what? I'm going to sell again. I had the position here. And I target again this low. That's what I did. I target this low. Nothing complicated, just simple stuff. And the only thing I'm waiting right now is if market can come there, I need to see market create something here in between. So market has to do something like this, run, then we sell. That is what I'm waiting for to see. And this is what end up happening. Boom, boom. Then market come. So if market does something like this, you as a trader, what is that is in your mindset? This one become my liquidity. It become my liquidity. I need to focus on it. I need to focus on it. Then this is going to be my zone. Then this is what end up happening. Because if that one is going to be my zone, yeah, because this is what I did, I'm sure. Yes, I believe this is what I did. So if that one is going to be my zone, this is what I'm going to take my entry and check what happened. Come, touch. Then we go. But it takes time before it gets to my zone. Everything that I'm showing you guys, if you go just on Telegram, what is our Telegram again? Okay. If you go in our Telegram, you're going to see this is the things I did. There was nothing complicated. This is what I did. You see, this is what I did. So simple. Then my target was this low. At the end of the day, you see how it take time. It even return again to the top after they break this area. Then you could take again from somewhere there because we have liquidity run, break of this low. You look for the level where there is a point of interest. You could take from there. And this is what ended up happening. Let me just go to M5. This is what happening. Boom, with TP. Then they take over. So simple. But how do you know market is already done all these things? How do you take another entry? Because this was my TP. And how do you know market is already do the displacement? We take out the low. We break the eye. What is this? You are done. If you want, you can refine it to your low time frame for you to understand what is happening there. Let me check M2 because I did not give a chance of doing it because I was busy with this Zoom, this recording stuff. Inefficient price, they feel take over. So simple, guys. It's the same story. It's happening like everywhere where I'm taking my trade. Even if we take, let's say, example, even if we take USA 30, USA 30 also, something like this happened this morning. This is what happened. The only first things that we need to try and understand is gonna be like the way we do normally, I'm gonna show you guys on the topic how do you approach the trade in the morning. Is where is our Asian range? Asian range start around 18. This is my Asian range where I look, and it end at the 0, 0. All this low is the low of the Asian range. So if I have something like this, then where is the measure point that I'm gonna look to do what? To sell. Let's say example this line, because there was something I was expecting here. If we extend it, you're gonna see it, because the only thing that I refined in the morning was this Eden base, the wick, the one that was resting there, that is above the Asian range. Then if you go to low time frame, you can refine your stuff for you to be able to take the trade, because this one gets here and manipulate. But you know, AUSAT sometimes is crazy, but the only point that you're supposed to understand is that where did the market start? Market started creating the range. It started from here until the top, where they retrace until somewhere there. They retrace inside. If you put your Fibonacci from here to the top, you're gonna see the retrace below where there is a 50%. What is this? This is an inducement. You could take it from here, or if you want, you could use this wick for you to be able to take the trade. This is the Eden base. Then you target the eye. So they get on top of that eye. They did the same scenario. Manipulate the eye, but check what happened here. You see what happened? So simple, guys. You just follow the stuff that we look. And I was not happy with USA 30, to be honest. I did not take it. Why? Because I was waiting since it break here and break this low, the one caused this eye. Market has to come at least somewhere here, but they get here, they use again these things. Same scenario, the one I did not take there on Nasdaq. I was explaining, if you remember, because of this. But that is not the end of the world, guys. If they did something like this, they come again, you see, proper inducement, we run, get to the top there, this candlestick, they use it to come again to the downside. You're gonna see something proper. Again here, guys, what is that you wanna see before you take a trade? It's the same story, guys, same story. You see? You can take your trade here. Or if you want to take the early entry, that is what I wanna see. But this one did not break properly for me to be able to take the trade. This is what I wanna see before I take the trade. So guys, I hope this video is gonna make sense to all of you. I hope it's gonna make sense to all of you, because even here I was expecting a sell somewhere here. I hope if I'm gonna show you something here, let me just show you guys so that you can see. Oh, is it going to open what I want? I think it's gonna open. Why is not opening? I wanted to show you guys. Let me check something. Let me show you guys something. I'm sure I mark it somewhere. It's not this one. Okay, let me just do something like this. It's okay. Yeah, this one. So I just want to show you guys this one. I'm sure here gold is gonna show what I was looking at. Open. Okay, let me see what is going to happen here. Yo guys, I'm sorry, network is a bit mad. So let's see what is happening. I'm open gold. I think I have to go to H4. Can you see, guys? Because I refined this area as to be the zone where I'm gonna buy, and market get there, touch. If you wanna refine, you can refine even to this one. to be your zone. But in case market decide to come to the downside, you can see trade inside here. And this was a risk entry because I took this entry. It's a very risk entry for me. So far, there is no any confirmation. Now imagine if we want a confirmation, we have to see market break this area. If we can break this area, this is when we're going to have a confirmation. So let's say break, we come. But because of this, oh, it's so scaring. So I hope, guys, this video is going to be a bit amazing to you guys, and you're going to also watch and go practice. So sharp, guys, enjoy.